Let's go. Folks, welcome. Welcome to our Accelerating Finance Towards Net Zero discussion. I am Mindy Luber. I've met many of you, but certainly not all, the CEO of Ceres, a sustainability nonprofit working with the world's largest companies and investment firms to integrate climate and sustainability into all that they do, with large corporations to integrate it into their goals and strategic plans, their products, their supply chains, their governance, and their policy positions. And today we're going to talk about our work with investors to integrate climate into all investment decisions, both from a risk and from an opportunity perspective. I'm delighted to be here today. I'm actually honored, more than delighted, with some of the most influential and inspiring leaders in the finance community. With me is Ceres and I'm going to get this right, Tara Pravala, the president and CEO of State Street Global Advisors, Thomas DiNapoli, the comptroller of New York State, Wendy Cromwell, the vice chair of Wellington Management, and Anne Finucane, the vice chair of Bank of America. And in just a bit, we'll also be joined by US Special Presidential Envoy for Climate, John Kerry. It is an extraordinary time to be part of the global climate finance movement. The growing momentum we've seen in the recent months and years and the lead up to the Leaders Summit on Climate this week has been nothing short of extraordinary, particularly the past few months. And those with me today are a big part of the reason why we are seeing this extraordinary growth. The largest investors and financial leaders in the world are increasingly embracing the inescapable reality that climate change is a systemic risk to our economy and to our planet. They know investments impact climate change, just as climate change impacts investments. And that's why we welcome the new wave, a huge new wave of net zero commitments that you'll hear about today from the largest asset managers and owners in the world and from the biggest banks and financial institutions. Together, all of us, we are part of an ambitious movement of monumental action within the financial sector, action that is now at a pace and at a scale worthy of making a difference in addressing the climate challenge. And let's be clear, these commitments are part of the expansive recognition of not only risk, but of a massive opportunity. The climate transition represents a historic economic and investment opportunity. This opportunity is spurring huge momentum in the US behind the shift to a net zero economy. The entire sector is beginning. We haven't gotten there, not everybody, but people like those on this call are moving forward to drive systemic change to address the climate crisis. We're not there yet, as I said, but the change is coming fast with lots of proof points along the way. The finance sector is moving and able to make a difference. And with every commitment, there are details with those commitments and short-term goals and long-term goals behind them. Just look quickly at the past 6 months. The world's biggest investors with asset owners and asset managers and the largest banks have committed to net zero and created powerful multi-trillion-dollar collaborations. Consider a few. Climate Action 100, an effort we've launched with global investors, has grown to include 575 investors with $52 trillion in assets working to move the largest corporate greenhouse gas emitters to align their business strategies with a net zero future. We've done that with our global partners, with asset owners around the country. That's approximately half of the world's total assets under management. And more than half of the companies that these investors have focused on have now set net zero commitments. And the Paris Aligned Investment Initiative, which recently launched as a collaborative global forum with our partners in Europe, Asia, and around the world, work to align portfolios and activities within the goals of the Paris Agreement. This initiative of asset owners moving to net zero has been accredited by the UN's Race to Zero and involves more than 110 investors representing $33 trillion in assets. And today we're going to talk a bit more about the Net Zero Asset Managers Initiative, having grown to include 87 managers with nearly $37 trillion in assets committed to supporting the goal of net zero emissions by 2050 or sooner, and at the same time setting 2030 targets. Today, we're going to announce 14 more asset managers who have signed on to this initiative. We know some will say that commitments are commitments, just words. I believe these commitments have teeth behind them, and we're seeing it every day. And now we're working with each of these players to translate the promises into deeds. That's why we're calling on all investors to issue robust climate action plans to achieve their net zero ambition. And finally, as we recognize the vital role of banks in our global transition to net zero emissions and the mobilization of the trillions of dollars necessary to build the economy we all seek. Tomorrow, we'll look forward to hearing from our colleague, Mark Carney, and the UNFCCC climate champions and the COP26 presidency, who will be making an exciting announcement relating to all stakeholders in the financial system, stepping up to achieve the goals of the Paris Agreement, and we'll look forward to working with them. And that's why we're delighted to say some of the largest banks, but notably the Bank of America, who's committed to getting on a path towards net zero financing. And it's our expectation that this bank and other leading banks will achieve their goals through the Race to Zero campaign. For 3 decades, Ceres has been at the forefront in building climate leadership in the financial sector, helping co-found and coordinate a number of global initiatives with our partners in Europe, in Asia, AIGCC, CDP, IGCC, PRI, UNEP, FI, We Mean Business, and countless others. And I know that's a mouthful, but these are the players who are out there every day. And now this greater momentum is being matched with the huge ambitions and capability of a new US administration that is pushing for bold climate policies and regulations that will accelerate even further this net zero transformation and do so at scale. And thanks to the leadership of US Climate Envoy John Kerry, who you will hear from momentarily, and others, the administration continues to take a series of sweeping steps, underpinning the scale of its climate ambitions and its intention to be a global leader on climate change. And just last week, beyond our investor community, we were proud to mobilize more than 300 plus businesses and some investors to support the administration's push for a strong national greenhouse gas emission reduction target. And that number is growing by the day. As the second largest emitter in the world, the US must do its part to reduce emissions. And you can bet the private sector will continue to deliver on the financial commitments that will make an NDC goal possible. We're at a pivotal point in the massive economic and financial transformation we have to make. And we're excited about the growing momentum as we head into this week's summit. With a strong NDC and finance all in, the US can and will restore its climate leadership in the world. And with the leaders on this call, people who have been at this for a long time, not because it's trendy, but because they've been leading on climate risk and ESG risk and analysis, I believe we can get there. Thank you very much. Let me hope that framed our discussion with not too many acronyms and buzzwords. And let me quickly run into introducing our speakers. Let me introduce our first speaker, Ceres Taraporevala, and I have worked hard, Ceres, to get that last name correct. President and Chief Executive Officer of State Street Global Advisors, the investment management arm of State Street. As head of the world's third largest asset manager, Ceres has led. He has made climate and other environmental, social, and governance issues, including racial and gender diversity, a key focus for driving long-term value for institutional investors. We applaud his sustainability leadership and all that he's done. Both State Street Corporate and State Street Global Advisors have been long-term valued members of the Ceres investor and company networks. And last year, we were thrilled to welcome State Street Global Advisors to Climate Action 100 Plus. Cyrus, thank you for joining us. Welcome. Over to you.
Mindy, thank you for that kind introduction. And let me start by saluting your leadership and the work of Ceres to build a more just and sustainable world. Your work's more important than ever in this year of COP26 as we realize we are very quickly running out of time to solve the climate challenge. Now, we all know that last year saw the worst public health crisis of our lifetime, but it was also one of the warmest years in the warmest decade on record. It's been said that COVID was the pop quiz for existential crises. Climate change is the final exam. As the third largest asset manager in the world, State Street Global Advisors has been engaging with companies and investors on both the risks and the opportunities of climate change for many, many years, as Mindy so kindly pointed out. But as the best available science says, we're simply not moving fast enough or comprehensively enough to cut the greenhouse gas emissions that are warming our planet to dangerous levels. So over the next decade, we must shift the entire world economy to a net zero emissions trajectory that will keep global warming well under the 2 degrees Celsius rise that scientists say is the critical threshold. And so the UN's right to describe the challenges, the race to zero and the race to resilience. This is the race of our lives, nay, for our lives. And every part of the economy must join in. And so today, I'm proud to announce that State Street Global Advisors is joining the Net Zero Asset Managers Initiative, part of a growing movement committed to net zero. In partnership with our asset owner clients, we'll work on decarbonization goals with an ambition to achieve net zero emissions by 2050 or sooner across all assets under management. Now, it won't be easy, but it's doable. And the alternative is far too dire to contemplate. Look, if we learned anything this past year from the race to develop effective vaccines for COVID in record time, it is that the coalescence of science, technology, human ingenuity, and just sheer resolve can accomplish extraordinary results. So on the eve of Earth Day this year, let's all show that resolve in joining the race to a healthier, more resilient, and more sustainable future. Thank you.
Cyrus, thank you. Welcome to the Net Zero Asset Managers Initiative, but thank you for that leadership, your sense that this is not about the economy or the planet. This is about both. This is about our children's future. Now let me introduce somebody who is both a colleague, a leader we have worked with for a long time, a member of Ceres board, but the comptroller of the state of New York and the New York Common State Retirement Fund. Tom is a true leader in the global fight against climate change. In December, he took the bold step to commit the fund the goal of net zero greenhouse gas emissions across his portfolio by 2040, becoming the first US pension fund pledging to achieve this ambition by 2040, 10 years earlier than most pension funds, but no doubt others will follow. We are proud that the fund is a longtime member of Ceres Investor Network. Tom has been a leader for decades. Thank you so much for being with us today. And Mr. Comptroller, over to you. 10 years before others. Go New York State.
Thank you, Mindy, very much for that generous introduction. Great to be with all of you today. And Mindy, I want to thank you for your resolute leadership at Ceres to continue to grow a legion of investors committed to a more dynamic economy and a healthier, more sustainable planet. As state controller and trustee of a $250 billion state pension fund, addressing climate change has been one of my key priorities for many years, because I know it's the right and the smart approach. Climate change poses enormous risks and opportunities for our society, our economy, and for our investments. As we know, the Paris Agreement, which our nation has thankfully rejoined, set the goal of limiting global warming to less than 2 degrees Celsius. This goal can only be achieved by governments and private sector entities, really everyone, realizing net zero greenhouse gas emissions by 2050 needs to be our goal, and 2050 at the very latest. Because the New York State Pension Fund is invested globally and across the economy, as the world moves to net zero emissions, so is our fund. And because we believe in the urgency and seriousness of the situation requiring ambitious action, as you mentioned, Mindy, this December we announced our goal for the fund's portfolio to achieve net zero by 2040 instead of 2050. And in March, we joined the Paris-aligned investment initiative. For us to take this important next step and achieve net zero by 2040, we need to use all the tools at hand. These include engaging with portfolio companies, especially large emitters, to ensure they are on a clear path to net zero emissions, advocating for public policies that are essential to achieving net zero emissions across the economy, and investing in climate solutions. Our Net Zero 2040 goal builds on the fund's 2019 Climate Action Plan, through which we committed to investing $20 billion in sustainable investments and climate solutions by the year 2030. We've already distributed over $11 billion towards that goal. And Mindy, today we announced another $400 million in investments in our climate solutions program. We're taking bold steps to protect our fund, but fully addressing climate change demands a massive national undertaking. It's a tall task, but it's not unprecedented. Whether it's FDR's New Deal or LBJ's Great Society, America has shown that it can unite around finding solutions to big problems. We have proven that we can overcome seemingly insurmountable obstacles with ingenuity, purpose, and leadership. We are at another such national moment. And thankfully, with the commitment of the Biden administration and with the focus and leadership of Special Presidential Envoy John Kerry, America is once again a partner and a leader in the global efforts to address climate change. Now is the time for an all-out effort to protect our society and our economy. We need all Americans and all sectors of the economy, including the financial sector, to step up, commit to net zero emissions by 2050 at the latest, hopefully 2040, and work together to achieve that goal. Good luck to all of us in this important mission. Thank you.
Well, indeed, good luck to all of us. Thank you, Controller DiNapoli. Let me now introduce another true leader who I can remember talking about these questions and issues with 20 years ago or 15 years ago at least. But Anne Finucane, as the Vice Chair of Bank of America, has been at this for a long time, leading the bank, making a huge difference. Through the bank's work across the board, we've worked together on so much of the bank's sustainability and climate leadership strategy, and it has been a pleasure to watch and be part of. I was heartened to see the recent $1 trillion commitment by 2030, their new environmental business initiative announcement at Bank of America, as well as their 2021 commitment to get on the path towards net zero financing. We all share the common goal of transitioning the global economy to the net zero future we must realize. Anne's been at this leading for a long time. A small institution like B of A can certainly make a difference, like so many of the others. Thank you, Anne, for joining us.
Thank you, Mindy, and good to be with you, and good afternoon, everybody. And I thanks also to U.S. Special Presidential Envoy for Climate, John Kerry, Comptroller Tom DiNapoli, and hello to Cyrus and Wendy. It's clear that the private sector accepts the key role we have in helping to ensure the low carbon, sustainable economy, which is good because the private sector will surely be critical in mobilizing trillions of dollars annually that are desperately needed. The banking and financial market sector in particular have an important role to play in financing this transition. That's why last week, as Mindy just mentioned, we expanded our environmental business initiative to mobilize $1 trillion by 2030 to further accelerate global energy transformation. Bank of America has worked closely for months, years, but months intensely with our peers in the industry to help shape a common approach to environmental business activities and our plans to help drive toward net zero in line with the Race to Zero efforts. The transition also creates significant business opportunity, and I think that may be lost on some. Through lending and capital markets activity, financial services companies can help align the capital needed to reduce the impacts of climate change and play a pivotal role in driving real-world emission reductions. To reach net zero commitments, the banking and capital markets sector is working together to create consistent frameworks for how we reach net zero through efforts like the SMI, Sustainable Markets Initiative, and PCAF, the Partnership for Carbon Accounting for Financials. At Bank of America, we are engaging with our clients to help them with their own net zero journeys. We can only succeed in our goal if our clients succeed in their own transitions. While seeking to help all of our clients, we are really focused on transforming the high emitting sectors, including power generation, oil and gas, materials and industrials, and transportation. And to support our clients, we have established a Sustainable Markets Committee, co-chaired by our Chief Operating Officer, Tom Montag, and me, and a dedicated global sustainable finance group that provides products, services, and advice that can really help clients reach their climate goals. And these include tangible products, green bond issuance, renewable energy asset financing, blended finance, investment in climate innovation like clean hydrogen, electric vehicle infrastructure, and sustainable aviation fuels. We believe another area that could use more focus in this, the nascent voluntary carbon offset market. Well, there are understandable concerns. Carbon offsets could help increase capital flows to projects that reduce or remove carbon in the atmosphere. This can support nature-based solutions and lead to more permanent carbon removal solutions. Often the only certified ways in which these offsets can be accounted for is through limited existing endeavors, reforestation, for example. We're looking at mechanisms that could allow companies to apply the money that is committed to carbon offsets to create investment pools for the development of critical scalable technologies. The use of the offsets could also provide capital to de-risk and develop critical infrastructure projects in both developed and developing countries much more quickly. And even as we're working with our clients and other financial institutions to drive toward net zero, there are some areas where public policy can greatly accelerate the work of the private sector. Two areas in particular. First, helping to drive toward one system of uniform global disclosures. We support the TCFD, the Task Force on Climate-Related Financial Disclosures, to help mainstream investors assess whether climate risk is appropriately priced in to company valuations. And as part of this effort, we're advocating for better and more comprehensive greenhouse gas disclosure. Without this, it would be very difficult for our industry to meet either our net zero or our financing goals, or for that for our clients. Both of these areas are core to the IBC, that's the International Business Council, Stakeholder Capitalism Metrics, that our CEO, Brian Moynihan, has been leading. The second area of policy support is to create or expand incentives that help dramatically accelerate adoption of existing technologies and, importantly, reduce cost of capital for emerging technologies, some of which I tried to reference before. Above all, our continued collaboration and coordination by and among government policymakers is key. This week's White House Climate Summit is a great and important step in that direction. So thank you for allowing us to be part of this group. joining here together. These are signs of great progress. Thank you.
And thank you for your continued leadership. It is indeed impressive. Now I'd like to introduce Wendy Cromwell. Wendy's vice chair at Wellington Management, another long-term valued member of the Ceres Investor Network and our Climate Action 100 effort. Wendy is also the director of the Sustainable Investment at Wellington Management, setting the research agenda and strategy for the firm's sustainable investment practice, a practice that is unquestionably a thought leader in this space. And with the Waddell Climate Research Center and CalPERS, in 2018, Wellington co-launched an initiative to integrate climate science and asset management. Last year, we were thrilled to welcome Wellington into the Net Zero Asset Managers Initiative, where Wendy serves as a member of the Global Advisory Group. She's also a member of the board of the Principles for Responsible Investment, a global partner in many of the global initiatives we've been speaking about today. Wendy, over to you.
Thank you, Mindy, and thank you, Ceres, for your leadership in this area. Wellington Management is very pleased to be a founding member of the Net Zero Asset Managers Initiative, which brings together asset managers worldwide who are committed to supporting the goal of net zero greenhouse gas emissions by 2050. As the saying goes, if you want to go fast, go alone. If you want to go far, go together. Net Zero Asset Managers Initiative recognizes that it's only by working together that we can respond to the risk of climate change and identify and create sustainable investment opportunities as we work towards a net zero future. We are proud that the initiative has been accepted as part of the Race to Zero campaign, alongside other initiatives for companies, banks, financial regulators, and governments. Specifically, we've pledged to work in partnership with our clients on their decarbonization goals, to set an interim target by COP26 for the proportion of assets to be managed in line with the goal, and to review our internal target at least every 5 years, expecting to provide updates much more frequently. In 2018, Wellington established a research collaboration with Waddell Climate Research Center. The goal of the partnership is to bridge the gap between climate science and finance. We want to understand how physical risks such as heat, drought, wildfire, hurricanes, floods, and access to water issues will impact society and the securities we invest in on behalf of clients. This research laid critical groundwork for our net zero commitment. Importantly, our commitment is not concessionary. We believe that ensuring our portfolio companies have credible transition strategies will be increasingly important to long-term security valuations. Often our clients and peers want to better understand the tools we expect to use to manage transition risks in portfolios. First, we will engage with companies to encourage them to set emissions targets and address their own climate risks. Through our work with Waddell, we've become acutely aware that decarbonizing our portfolios by selling securities does not insulate them from climate risk. The emissions still exist and will impact our holdings in the form of physical climate risk. By engaging with companies to set science-based targets, we help our clients avoid this risk. Secondly, we can manage the overall carbon intensity or warming potential of a portfolio through portfolio construction. As an escalation tool, we can divest from companies that do not have a credible transition strategy. And we can seek out opportunities to invest in companies providing mitigation solutions. As evidenced most recently by the wildfires in Australia and California, and the extended deep freeze in Texas, the impact of climate change is not too far away to matter. We believe we will see a major transformation in capital markets in the coming years. We look forward to working with others to strengthen the financial system for the transition and to helping our clients develop portfolios that are resilient to climate risks and aligned with a low carbon future. Thank you all.
Wendy, thank you. And thank you for the leadership you're taking on at Wellington. I'm now delighted to introduce John Kerry. And before I give you his formal introduction, I can remind everybody at the start of this call, some of us off camera were talking about where we live. The important thing to note here is that 5 out of 6 of the speakers are from Massachusetts, so I'm not sure what it says. But Tom DiNapoli, you're the lone guy out on this one. So Red Sox versus Yankees, I don't know what it means. But now I really am delighted to introduce John Kerry, the United States Special Presidential Envoy for Climate. John is our nation's first Special Presidential Envoy for Climate and the first ever principal to sit on the National Security Council, entirely dedicated to climate change. President Biden announced Kerry would have a seat at every table around the world as he combats the climate crisis to meet the existential threat that we face. Prior to this appointment, I don't know that I need to remind anybody, but he served as Secretary of State and as a United States Senator representing none other than our home state of Massachusetts. He was also the Democratic Party's nominee for President of the United States. We're thrilled to have the U.S. Climate Envoy with us today and know that he is out there on planes, and I'm sorry if they don't stop those travels around the world, but leading us to a Paris-aligned future. John, over to you.
Well, thank you, Mindy. Thank you very, very much for the good introduction. And not sure what it means to have either Red Sox or Yankee fans this year, because neither are terrific, but that's okay. Thank you to Ceres for what you and everybody who are part of it have done. It's a lot of work over 30 years, rallying the top investors in the companies and making the business case, which I think is a very powerful one, for climate action and sustainability. And increasingly, all of you know, because you're in the middle of it, ESG and the Sustainable Development Goals have been increasingly part of the dialogue in boardrooms around the world. But what we've achieved is the beginning. I mean, really the beginning, because we've got a gigantic task ahead of us. I thank you, all those who made the announcements today. $5 trillion added on top of 32 trillion of assets under management previously committed under the Net Zero Asset Managers Initiative. And the pace of these commitments is obviously growing because of the example that you've set for the industry. I think we're close to a tipping point now with the 37 trillion committed, 40% of global assets under management committed to net zero. And that's great. But I want to thank particularly Cyrus, thank you, and Anne Finucane, Wendy Cromwell, Thomas, DiNapoli, and I want to congratulate everybody for sort of coming together. I know these things are not easily decided on, and there are obviously implications. But we have the three largest asset managers in the world, BlackRock, Vanguard, and State Street, as part of this initiative. And I'd be remiss if I didn't point out that Wellington was obviously a very early proponent of this initiative. So here's the reality, and I want to put it to you all. This is from today. This is the Guardian in London. But the headline is carbon emissions to soar in 2021 by the second highest rate in history. The first highest rate was after the crash and financial difficulties of 2008-9. So commitments are going to be really critical here. I will just tell you that as I've run around the world and as I talked in China the other day, for the first time ever, China has agreed to call this a crisis. And China committed not just to peak by 2030, but they've talked now about reducing. And instead of a plateau for the years beyond 2030, they embrace the idea that we all need to take actions in 2020 to 2030, and that we all need to build out our capacity way beyond what it is, begin to shift out of coal dramatically. We're way behind. Even if we did everything that we have committed to do in the Paris Agreement, and we're not, the Earth's temperature would probably rise to about 3.7 degrees. It's not that we faked it in Paris. It's just that the best we could get nations to do was sort of a voluntary process that started it. And for the first 2 years, what we really did was send a message to the marketplace. And $358 billion went to alternative, renewable, sustainable energy for the first time ever. More money to sustainable, renewable than to fossil fuel. Then President Trump came in, pulled the rug out from under that momentum, And now we're back trying to recreate it. Only the scientists came out 2 years ago and said to us, you have 12 years left to make the most critical decisions to avoid the worst consequences of climate crisis. So now, because we wasted 2 years, we're down to 9 or 10 years. That's the challenge for all of us. And Glasgow is really the last best chance that I think we have to align the world to move in this direction with speed. What happened with China the other day, frankly, is really critical. And now we need other countries to join us in building higher ambition. What President Biden has done is set up a summit on Thursday. 40 heads of state will take part in that summit, including Prime Minister Modi, President Putin, President of Indonesia. We hope, we're pretty confident, I hope President Xi will be there. And they're all going to be raising ambition and moving in this direction. And what you've done with this kind of announcement is excite people to the reality that people who know how to make money, people who manage money, the marketplace is moving in this new direction. I can't think of anything, frankly, that's going to have greater impact than people stepping back and going, whoa, this is serious business. If those guys are involved in moving investments into that area. And the fact is that the scientists have also told us the agreement in Paris was to get to well below 2 degrees, not just 2 degrees, but well below 2 degrees. And certainly well below is not 1.9, 1.8, 1.7. So we're going to have to move. The scientists have now coalesced around the idea that to really avoid the damages, because we're already at 1.2 and we see what's happening. You hit 1.5 or up to 2, we're still going to have catastrophic consequences. And every economist will tell you it is cheaper to invest now in the remedies and the alternatives and move to this new energy economy than it is to do nothing and to wait. And the witness to that is we spent about $260 billion a few years ago on 3 storms, Irma, Harvey, and Maria. That was just to clean up the mess. So we're looking at massive expenses if we don't do this right. I am, deeply appreciative of your joining this effort. I think President Biden is going to probably join with Europe in disclosure requirements. That's going to have a major impact in pushing people. But I just want to leave you all with this one major thought. I think it's a major thought. Net zero by 2050 is a great goal, and we have to achieve it. And it's a big step for a lot of people to make. But if we don't do something serious in 2020 to 2030, we don't get to net zero by 2050. That's why what China's doing in other countries, Modi is talking about deploying 450 gigawatts of renewables over the next 10 years. We will need finance to help us make that happen. But these are revenue producing projects. They should be commercially viable. And we need to work with you, to work with India to make sure their system makes these things commercially viable. So I'm really anxious to work with everybody as we go forward. We need to build the capacity to help companies to make this transition. I'd encourage all of you and every financial institution to lay out a climate action plan with specific targets year on year to align your investments with the net zero in the end. And we're going to do very much the same thing in government, I guarantee you. So look forward to working with you. I encourage you to continue to be the leaders that you are here today and over the last few years in building this net zero asset coalition. It's a very important message, and I'm pleased to be here to share it with you.
Well, that's great, and thank you. If we could ask you just a few questions, do you have 3 or 4 more minutes?
I do.
Great.
That's the plan.
So we know from talking with companies and investors alike that even stepping up on policy, I shouldn't say even, is high on their agenda. How could we all be helpful to you as you drive a global and domestic policy agenda?
Well, you all have big footprints. Your supply chains are critical to all the companies you invest in. And you can help those investors, obviously, in the conversations you have with them. Some of them will resist. I know some of you exist, obviously, to return the best profit you can to people for whom that's the only important thing. And that's not going to change completely. We know that. But you can be extremely influential in moving people to understand that their investments writ large are truly going to be at risk if we don't respond to this. I mean, I was in China, I was in Shanghai, and the Chinese have accepted what the potential is for what happens to Shanghai. But let me tell you, what happens to Shanghai is also going to happen to the coast of Florida and to Louisiana and New York City and other places. We saw what happened with Hurricane Sandy. So the need to, there's going to be huge community pressure now to build, to engage in resilience and adaptation as well as mitigation. And I think you can try to figure out how you could help some of these countries to make these transitions. I'll give you an example. India. India is a massive market. India wants to compete with China in solar panels. There's new technology now that shows that solar panels can become 40% more effective than they are now, efficient. That's a game changer. And if you can help India by saying to them, hey, look, we got a few $1 billion here, we're willing to invest, but we need your distribution system to tighten up. We need you to make sure the bills are going to be paid. We need a PPA that is big enough and strong enough and long enough that we have the ability to make this kind of a commercial investment with our money. And we also need to bring the World Bank and the IMF and the Asia Development Bank, the Africa Development Bank, the European to the table. And we need to bring philanthropy to the table, because philanthropy could actually help de-risk. And if we can have blended finance with some de-risking, this all becomes obviously much more attractive. So I think your role as the most influential people in the world of finance is very, very special. And that's what I think makes this kind of announcement in the conglomerate more and more powerful as more and more people are joining up.
Well, I don't think there's anything that this group wants more than to see you be successful and to be part of it and to make sure those commitments of the United States and every other country in the world live up to the global commitments that you'll be talking about on Thursday and Friday. How confident are you feeling?
How confident am I feeling? Can I tell you how hopeful I'm feeling?
That would be fine.
I'm super hopeful. I'm also deeply concerned that there's a political, that there's not a sufficient level of courage and capacity in the political system to move. But I think you all, again, have a huge ability to change that equation. Let me just say that the UN, I mean, when I left being Secretary of State, the reason I'm doing this now, is because I concluded pretty logically, no government is going to be able to save us from this crisis. There's just not enough money. There's no fiscal capacity for government to do this, because the UN finance report tells us that we have a gap in achieving net zero 2050 by about $1 to $2 trillion annually for 30 years. So where's that going to come from? Well, you've stepped up, and the banks that have made announcements in the last few days, like Bank of America, $1 trillion over 10 years, JP Morgan, $1 trillion, Morgan Stanley, Goldman Sachs, et cetera. This is critical, because that's the only way we get there, is by having private sector moving in that direction, recognizing that whoever discovers battery storage or just storage, or creates green, less energy intensive hydrogen, or finds a way to do direct air capture and change the dynamic of capturing carbon, they're going to make billions of dollars. This is the biggest market the world has ever known that's awaiting everybody. And the transition we have to make is the biggest economic transition since the Industrial Revolution. I want America to be the forefront of the new technologies that we need to get this done, and we do need new technologies. There's a gap right now, and I argued this morning with some folks abroad that as we approach the Glasgow meeting, we have to be honest with everybody. We have incredible capacity to get up to 85, 90% renewables, We've got to address people's baseload concerns, and there are a number of ways to do it. But we have to make certain that people understand that there's a gap right now. I'm told that 50% of the emissions we need to get reduced will come from technologies that are not yet in the marketplace. So MIT, Stanford, a bunch of places, Polytech around the country, these people are going to be more and more essential to breaking the code on how we accelerate our rush there. And in the doing of that, we're going to create unbelievable numbers of jobs. Building a grid in America. We don't even have a grid in the United States of America. We can't send energy from one part of the country to another efficiently and at lower cost using AI and quantum computing. How absurd. We're the country that went to the moon, we invent the internet, we invent vaccines, but we're not able to send electrons from one place to another. Insanity. So I think this is just gigantic, and you all, from the boardrooms of the biggest financial institutions of the world, you have so much influence to direct investment in the right way and also to get people to make the right choices.
Well, that sounded hopeful to me, despite that. Let me just ask if any of our other panelists have a quick question for John Kerry before we go to a few public questions, and then we'll let him go before that. Okay. Well, we're going to be hopeful. We're going to be there standing behind you as you work on commitments from all over the globe. And every one of these institutions are global investors, as you say. So they're not unique to the United States. Their power, their clout in China and India are crucial. And I have no doubt each of our participants are standing behind you and will do so. Thank you for joining us. If you could stay for questions from the audience, great. Otherwise, we'll be with you for the rest of the week.
I've got about 5 minutes, I'm told.
Okay, great. My colleagues who are managing this, are there questions from the audience? Okay, I've got a few. Let me start with, to what extent do panelists, and this is, it's not complicated, but it's something we're all dealing with, agree that carbon offsets are a part of where you're going to get to net zero, but how do you know when an offset is a legitimate offset, and how much are you relying on carbon offsets when you make a commitment to net zero? And that question came from Barton Alexander.
Mindy, I can jump in and start us off there. Carbon offsets are an allowable part of the Net Zero Asset Managers Initiative, but they're intended to be incremental. In other words, there is a speed bump, if you will, or a commitment that's made at 2030 for a 50% reduction in CO2. If you get to 2029 and one of your strategies has been working with a company, an investee company or holding, and they're almost there, and you think that they're about to make this science-based target commitment, and you think that they're really genuine, and you don't want to sell them in order to meet your 2030 target, you can buy carbon offsets to offset that proportion of, incrementally that proportion so that you can make that speed bump. Certainly you can't offset all of the emissions via offsets for the 2050 goal. And then in terms of credibility of offsets, I mentioned Woodwell earlier, and we've been working with them on ways to enhance the credibility of certain forestry projects so that you could more directly trace the offsets and link them to the specific forestry projects, because we recognize how important it is to retain the intact old growth forests that we have as carbon sinks.
So Mindy, you know that I already have said so in my remarks, but I think they're important. I think they are time limited. I think they should be transparent. It should be a small percentage, and over time it will be sunsetted, but they could be meaningful in terms of putting money into a system in terms of concessionary capital or investments in technology or research that simply wouldn't meet a capital markets hurdle. So I think that it needs to be an effort that isn't singular, and I think that we have to have the same kind of rigor that we're talking about throughout the system. But if we could get that, it would be a tool.
An important one, for sure. And I think those answers make sense. They can't be everybody's answer. We'll just say we're committing to net zero by offsetting all of our emissions. We've got to bring emissions down, and as Anne just said, and in modest ways. A question from Inside Climate News for you, Senator Kerry. How can the US really be helpful to mobilize private sector and public sector funding for the developing world to deal with adaptation and resilience? Obviously, we're doing better here than elsewhere, but as you look at the global picture.
Well, we have to mobilize the capable nations. There are 20 nations that are the largest economies in the world. China and the United States being the two biggest. We have to mobilize them because they have the money. I mean, it's the old Willie Sutton thing. Why'd you rob the bank? That's where the money is. So where do we go here? We go where the money is. And the less developed countries, I talked to one of them today, South Africa. They need help. You know, notwithstanding India's size and power, it's going to need some help. What kind of help is that? Well, we have to mobilize some concessionary money. For instance, the Green Climate Fund. We're supposed to be raising $100 billion a year for the next 10 years. We haven't done that yet once. And the United States was delinquent because President Obama was only able to get 1 billion of his 3 billion commitment out the door before the Trump administration came in and shut it down. So the world now looks at us and says, you owe us $2 billion. Plus, you're a new president, and we expect you to, pony up. The fact is, we're going to pay our $2 billion arrearage, and we're going to put a number down going forward, and we're going to call on other nations to do the same, and we have the Development Finance Corporation, which is our new mechanism, used to be the XM, et cetera. We will use that as a lever, and the other things I talked about earlier to try to accelerate grants. We have to have some grant money in the pipeline, some concessionary money. But there are many, many more places, as I described, where we think there are commercial deals to be made under the right circumstances. And that's another place where the money can come from. And we've got to get, if we can persuade countries to cooperate. But for instance, I was talking in Mexico today. Well, we're going to go down to Mexico. We're going to work with the Mexicans. We think there may be a North American bloc plan that we could put together, Canada, US, Mexico, which would have some impact. But right now, we have about 60% of global GDP lined up to, on Thursday, make announcements that are going to significantly raise their ambition and line them up to help provide some of this wherewithal going forward. And that includes countries like Canada and Japan and others. So we're just going to have to work at this on a steady basis.
Impressive, and that all makes great sense. We got 4 or 5 questions that lit up quickly related to your mention of disclosure, climate risk disclosure. We know that Apple was one of the first corporations to call for mandatory disclosure, along with certainly many policy wonks and many of our investors over the last 10 years. Apple last week and Salesforce today. I hope that helps support your vision that it sounds like you think is quite important. Your sense of climate risk disclosure and how it relates to the EU and what the US might be doing.
Well, this will have to be, I apologize, Minnie, this will have to be the last question because I've got another.
No problem.
But let me just say this. I was recently in Brussels and I met with European leaders. They already have defined disclosure. They've got their own standards out there. As everybody knows, Europe tends to be more regulatory. We tend to be, or hopefully are more incentive based. But disclosure, I think, is here to stay on a global. I think it's going to be global. And we're going to have to harmonize our understandings, which will require some negotiating. What are the principles we're applying to the investments that qualify as legitimately climate, and also what are the standards by which the disclosure is made, what assets fall under that, how far out. We're just going to have to try to find a way to harmonize it. But I think disclosure will be harmonized. I think it can be. And I think the whole world can operate by a similar standard, hopefully. And I think that has as profound an impact as anything. Because if you're managing and with your fiduciary responsibility looking out X number of years and making judgments about the quality of the investment you're making, and everybody's doing the same thing, and you're all doing it by a sort of agreed upon scale, that's going to have a profound impact, I think, on the allocation of capital. You're not going to put it into one of these most risky or crazy places, or there'll be a premium for doing so. But I think it changes the game in a dramatic way. And I you know, I'm not in that business, but it's sort of common sense, obviously, that if people are looking at you and there's transparency, and you've got to make a common sense standard about what's the liability of what you're putting money into, you're going to have a different set of outcomes, and that's what I think is going to happen. And I think it changes the game. I think all of you, by making the commitments you've made, are ahead of that curve, and will probably be the ones who help define the harmonization.
Sounds great. Thank you, Senator, Special Envoy, all of the above, neighbor in Massachusetts, be well.
Of all my titles today, given what happens up on the Hill, I'm not sure the senator is the one to ride with.
We'll take it back. We'll be there to support you. Thank you for your leadership. Folks, if we have 3 more minutes, and I have about 87 questions that have come in, and I apologize to those, but if we could take 2 minutes, 2 of the 3 minutes, that would be great. There are a number of questions about whether we might end up seeing a price on carbon, which of course to capital market leaders like yourself sends honest pricing signals, and that's capital markets. And then there's politics, which might make it a bit harder. So any thoughts about the hope for a price on carbon?
Well, I'll start. I think there's a price on carbon now. If you're trying to get to net zero and you're talking about, as we did earlier, these offsets, you're essentially creating some form of pricing. And that will only grow more sophisticated and more focused in the months to come, I think.
Great. Any other thoughts? And I know we are living in a unbearably divided country. So passing things like this may be a bit hard in the United States at the moment. Any other thoughts?
No, I was just going to add that I think, a price on carbon could be an important signal, but even more important is the disclosure that Special Envoy Kerry just described, and hearing him say that he believes the US will harmonize with Europe in some way, or they will work together to create common disclosure standards so we can all make better decisions about our investments, I think is really welcome. And that will have as powerful an impact potentially as carbon pricing.
Well,
I would just add, Mindy, a more
please.
realistic price for carbon is what we really need. There is a price for carbon, but I think some of us would quibble with whether it's a real price.
Fair enough.
Right, because it's not market-based.
Right. Wendy, coming back to your comment, and that is both a Little Birdie and a number of publications have been suggesting that the Biden administration will be announcing something on disclosure over the next couple of weeks. I think economy-wide, I know that the Secretary of Treasury is involved. So there are opportunities now that we never had before. When all of us were fighting for climate risk disclosure 10 years ago, and the SEC passed guidance, but it hasn't been executed on. I think now is the day, the time, and hopefully sometime soon. To all of you, thank you. You are the leaders that are going to make this happen. Everything that John Kerry said only reinforces it will be private sector financial leaders that are a key part of moving us forward. So you give me hope, and I hope you all do well. Have a great day, folks, and thank you for joining.
Thank you.
Thank you.
Thank you, Mindy, for your leadership again.
Be well.